Welcome. I just backtested this divergent strategy and the results are very impressive. 76% win rate using a 1 to 1.5 risk to reward ratio, which is the best that I have personally tested on the channel so far. So wanted to make a video. Hopefully it helps someone create their own trading system that they can utilize. So let's talk about the strategy, the rules to it, stop loss placement, take profit target, things along those lines. And then I'll show the results of the back testing that I've done so far. I've only back tested 51 trades so far. So that 76% win rate figure is based on that small sample of 51 trades. That was due to limitations of price data available on TradingView, although I'm going to put it on the bar replay feature and double up on that. So we'll see in the future. But let's talk about the strategy, indicator, entry rules, everything like that. Before getting into the exact strategy rules, a quick shout out to my affiliates. First, we have a cryptocurrency exchange, Bybit. If you're interested in trading crypto, check out my affiliate link in the description. There's also BitGet exchange, also for trading cryptocurrency. This one does not require KYC, so you are able to use this in the United States if you can't use Bybit. Now, both of these have a great track record of safety and have never been hacked. So great choices and safe exchanges to use. Now, let's get into the strategy rules, starting with the indicator itself. The one and only indicator being used for this strategy is called Market Liberator B. There are two other indicators very similar to this one. One is called the Wu Manchu Cipher B plus divergences, can be found for free in the indicator library. It's called Wu Manchu Cipher B plus divergences here in the public library. There's another one out there called the Market Cipher B, which is very expensive. So I'd recommend going with one of these free options, Market Liberator B. I believe it was a small donation of any amount to get access to it. It was a long time ago that I got access to it, so I don't quite remember, but you can look it up online if you want the Market Liberator B or the Wu Manchu free one in TradingView. So I am in no way affiliated with any of these indicators whatsoever. So, use the free ones by all means. I'm not promoting these by any stretch of the imagination, okay? I just am making a strategy with this indicator because it's a popular one and people are interested in this indicator, okay? So let's get into the strategy rules here. So this is a regular divergence strategy. So what's a regular divergence? Well, there's two types. One is a regular bearish divergence and one is a regular bullish divergence. Regular bearish divergence would be when price is making a higher high, but an indicator is making a lower high. So we have an instance of that right here. We can see price makes a higher high right here, but our indicator, these blue waves, make a lower high, okay? It's a regular bearish divergence. And then this green wave as well. We can see lower highs on this green wave, but each time price actually makes a higher high. So that's a regular bearish divergence. We have it here as well. So from this high here, this high here, this high here, we're getting higher highs on price, but lower highs on this green wave, lower high on this blue wave here. Okay, so that's a regular bearish divergence. And the rules for this strategy for entering a short position are, first, we do need to see that we have the blue waves come up into the overbought territory, okay? So above this upper line here, and that's the 60 level. Overbought territory, blue waves. Next thing we need to see is green waves, regular bearish divergence, okay? So price makes higher high, but at the same time, we get green wave making a lower high. So we can see that here, lower highs on green waves, and that is confirmed. So once we have that, we're looking for a lower high cross down on our blue waves, okay? So we get that right here, lower high cross down on the blue waves. That's our entry signal, okay? Right here, here's our cross down on this candle. Risk reward ratio is 1 to 1.5. Stop loss is placed at the high before the cross down. And that is the setup. Okay, so let's go to our next one. Next one, we get blue waves, overbought territory. Now we're going to be looking for higher high on price, but lower high on blue waves. So you can see we get that right here. Take a look. Green wave, lower high, higher high on price. Okay. Now we're looking for a lower high cross down on the blue waves. Right here, we get it. So this is our entry right here on this candle. Stop loss placed to the high before the cross down, right? Highest point of this, okay? And then 1 to 1.5 risk to reward ratio, okay? Now let's move on. We have a buy setup. So now we're going to be looking for regular bullish divergence, not bearish divergence, bullish divergence. So what's a regular bullish divergence? It's when we have lower low on price action, but at the same time a higher low on our indicator. So same thing, but the opposite. First thing we need to see is blue wave has gone into the oversold territory. Okay, so we get that a lot here, so that's valid on this move down. And then we're looking for our higher low on our red money flow wave, but a lower low on price. So first time we get that is here, this push down right here. This creates a lower low on price, but at the same time there's a higher low here on our red wave. Okay, it's the first time it happens on this push down. Now we're looking for our higher low cross up on our blue waves. So zoom in here, cross up, higher low, cross up right here. So that's our entry. Okay, entry candle. Stop loss goes to the low before this push up, right? 1 to 1.5 risk to reward ratio. Okay, let's move on to the next setup. Here's our next valid setup. So another bullish regular divergence. So we're looking at this coming down. We have our blue wave has gone oversold. And then we're looking for a higher low, regular bullish divergence on the red money flow wave here. Lower low in price, but higher low on our red wave. And then we're looking for a higher low cross up on the blue waves. So here, blue wave comes up, comes down, higher low cross up. That's our entry. 1 to 1.5 risk to reward ratio. Stop loss at the lows here. Hits profit target, and then we get another setup. Okay, here's our next one. Lower low on price, right? We have oversold on our blue wave. Then we're looking for a higher low on the red waves. At the same time, price makes lower low. Here, very clear. Here's our higher low cross up on the blue waves after we have those other factors in place. And then that's our entry candle. Okay, close of this confirmed cross up. Stop loss to the lows. 1 to 1.5 risk to reward ratio. Profit targets hit over here. And then we actually have another one, a short setup here. So again, looking for regular bearish divergence this time for our short setup. So higher high on price. We have the blue waves have gone overbought here, right? We have a lower high on green money flow wave here. At the same time, price makes a higher high. So we're looking for a lower high cross down once we have all those factors. Here's our lower high cross down on the blue waves. This candle, stop loss to the high, 1 to 1.5 risk to reward ratio. There it is. Let's move on to our next setup. Here's another buy setup. So price comes down. We're looking for regular bullish divergence with the red wave. Okay. So coming down, we wait for a lower low. Here's a lower low right here. And we do have a higher low on our red wave here. But we don't get a higher low cross up on the blue wave till over here. Okay. And that actually happens right here on this candle. We actually get a lower low in between there. So this lower low, we have to make sure that that also has the regular bullish divergence, which it does. So lower low on price again, but making sure we still have the regular bullish divergence on the red waves, which we do. Higher low on red waves, lower low on price. And then we get our higher low cross up right here with our blue waves. So that's the entry. Then profit target is hit way over here. Quite a wide stop loss on that one. It's another entry right here in between there. So we get lower low on price. We're looking for regular bullish divergence, red wave. We have it. makes higher low in the red waves. Make sure that our blue wave had gone into the oversold. Then we're looking for a higher low cross up on the blue wave. Okay, see it? Very clear. Here's our higher low cross up right here on this red candle. It's the entry, 1 to 1.5 risk to reward ratio, stop loss to the lows. Now that's the strategy, pretty simple. Now let's get into the back testing. I'll just fast forward through that and go over the results. All right, here are the results from 51 backtested trades. This one on Bitcoin against the US dollar using a 1 to 1.5 risk to reward ratio on a 15-minute time frame, which took 3.5 months of price data. So 39 of those were winning trades, 12 were losses, the win rate being 76% from that small sample of backtested trades. The most losses in a row was 3 and the most wins in a row was 8. The gain on the account, 46.5%. And imagine for 100, you can essentially double all of these numbers. And that assumes a risk of 1% of the account equity per trade, also not compounding. So I don't want to put this on the strategy ranking spreadsheet because it's not a full 100 trades like all the other ones that I've tested. So it's not really a fair comparison, although you can get a rough estimate if you double up on all of these figures. So, you know, it is what it is. I'm going to have to do a larger sample of back testing, get some more price data going to see the full results, and then we can put it on that strategy ranking spreadsheet. But here are the results for now, and thank you guys so much for watching. Don't forget, if you're interested in trading cryptocurrency, check out Bybit and BitGet Exchange in the description, my affiliate links for those, and appreciate you guys watching. Have a fantastic day.